This is the USD card Friday morning analysis. This is the USD card Friday analysis. So throughout this week, we've had some nice movements starting from on Tuesday afternoon. The market started a nice movement where we short the market Tuesday evening, held our position till yesterday, that is Thursday afternoon, where we closed out our short position Thursday afternoon. So basically this week we saw the market dropping from a major level. I think from around here. If you've seen, we are marked here. From around here, the market dropped starting from on Tuesday afternoon, where the market started declining from price around 1.41173. Yeah, let me mark it out so we have a clear view of what's going on. Yeah, so at that level there, that was where we saw the market shorting. That was where we saw the market declining from on Tuesday evening. All right, so we saw the market declining Wednesday and Thursday, and today being Friday, we should be seeing the market make some pretty nice move, and we should be seeing how this week comes to an end. All right, so we're at the daily time frame. No need to waste much time. We're at the daily time frame. Let's just widen it up and see how the days has been going. All right, so let's see 3 days back now we've had some nice drop. 3 days back we've had some 3 days ago, that was Tuesday, Wednesday, Thursday, we've had some nice drop, and we are able to capitalize on this drop. So if you've been following these videos, you would have seen how the market developed and how the market got to this certain level. We analyzed everything. We make sure we observe and we predicted every movement as it unfolds. All right, so let's see what we should be expecting today, being Friday, and how the week is going to close and what we should be expecting. All right, so the 3 days movement has passed. Now you can clearly see price is on a demand level. I called out this demand yesterday morning section, but yesterday morning section I was cut off by I wasn't able to finish the section on yesterday's analysis, but I made sure I called out these major levels I saw yesterday. All right, so today Friday morning, we can clearly see this. You can clearly see there's a demand here. We ran into that demand yesterday. This was the level we took our profit from. After the drop of the 3 days from Friday, Wednesday, Thursday, price came to this demand. Price dropped to this demand level where I called it out yesterday, and I said this could be a level where I would be watching the market and see how I observed how volatile the market was and how aggressive the market actually dropped. So I closed out my position yesterday, and we were looking to see if first of all, let me explain how we got here before I complete that statement I was about to say. All right, so now you've seen that there's a demand level here, which is this red line here. We saw the market dropped aggressively to this demand level yesterday. The market held its position there, was not able to break below it, so we closed out our position. Now we are observing the market still holding above the demand level, showing that truly there was demand in this level here. Truly there was demand right here. Demand actually got into the market right here. Now that's for the daily time frame. Now let's go down to our execution time frame, our normal time frame. Now let's get down to business. Now this is the 4 hours time frame, our final time frame. This is where we take up This is where we take our position. This is where we look at market reversal. This is where we look at the liquidity in the market. This is where we look at events that are taking place currently in the market. This is the 4-hour time frame. All right, so everything we're going to be doing, pure price movements. All right, now I want you to keep your eye on this level here. Now we saw price yesterday. We saw price dropping aggressively. You can clearly see the huge bearish engulfing candle we saw here yesterday. Very huge, similar to the one we saw few hours yesterday before on Wednesday morning. I think this should be on Wednesday evening. On Wednesday evening, this was the what is it called? This was the bearish engulfing candle we saw when the downtrend start, when the bearish movement started. We saw this bearish movement where I called it out that, okay, with this movement we will be holding our short position, because now we have a strong belief that bearish is really dominating the market. Now same thing happened here, where we saw the market dropping, having a strong bearish displacement, and this automatically gave us an insight that bearish traders are active, bearish movers are active in the market. So now you may be asking, if we believe that bearish traders are still in the market, why did we close out our short position? Why did we close out our short position? Now this is where things gets really funny and really sweet to understand price movement and to understand supply and demand. All right, so I'm going to explain a little bit about supply and demand so we understand why we closed our short position, even though we saw a strong bearish displacement. Now it's all about target. It's all about having a target in your mind. When I short my position here, that was on Tuesday, I had a target on my mind. I had two targets. I was targeting two levels. This was the first target. This was the second target. So our first target, after shorting the market here, our first target was this level here, first TP. You can call it first TP. First TP was this level right here, and second TP was this level right here. Now price dropped aggressively to my first TP. You can clearly see it here. Price dropped aggressively to my first TP. Now during this level dropping, during this drop, it dropped too aggressively. There's something like too aggressively. I don't know, a lot of traders don't really talk about this liquidity movement in the market. So there's something like how will I put it? Inside traders likes the habit of taking you unaware when you least expect a movement to happen. That is when that movement will actually happen. When you are not expecting it to happen, that is when it naturally happens. So this is one of the major price movement rules. When you see a huge bearish displacement market like this dropping to a key level, you have to be conscious about that key level, because a lot of position would have been closed here. A lot of position that was entered here, a lot of position that was executed here would have been how will I put it now? A lot of position that were executed at this level here, this level, this 1.4075, a lot of this position would have been closed right here. You understand? A lot of this position would have been closed right here. Because of this bearish displacement, a lot of traders would not be able to detect the inside movement. There's what we call inside movement, inside trades, and inside price movement. So a lot of traders will not be able to detect these movements while it takes place. A lot of traders will not be able to detect this movement while it takes place, so they will still be holding to their position, thinking that, okay, yeah, there's a strong bearish displacement in the market, so naturally we're supposed to still have a strong bearish movement. No, naturally a lot of orders has been closed, a lot of inside orders, a lot of bearish inside orders has been closed at that level. Now there's no confirmation, there's no way you can confirm if the orders are being closed, but when you see a strong bearish displacement a strong bearish displacement candle like this, full bar candle, no wick, just aggressive, you should be conscious about that level, mostly when it's dropping directly into a certain key level. Like yesterday I was still conscious about this bearish displacement we saw here, this very bearish displacement. If you watched yesterday's video, I also called it out that, okay, we are hitting this level with a strong bearish displacement, and I had one or two things in my mind that I'm going to do. One is to watch out for a pure reversal. Remember, just listen, this is where the thing gets normally interesting. I have one or two things in my mind, one or two things in my mind, and one of them is to watch out to see if there would be a reversal or continuation downwards. Then I analyzed how the market actually moved after the bearish displacement, and we confirmed it that yes, this is a real bearish displacement, and a nice breakout. You understand? Remember, breakout, a nice breakout. So let's watch out to see if this also would be a nice breakout or a reversal. Now this is where we observe for reverse or a breakout. Now you can see the thought process and how I react to the price movement. Now the typical trader would basically hold his position because it thinks this is a pure bearish displacement, which means this is a huge bearish candle, so automatically the market must be weak. So we should not be expecting any demand to enter into the market any moment soon. But most of the time that thinking process is wrong. You have to expect the unexpected when you are trading, because this market is all about being smart when the time comes for it. All right, so I've been able to explain how the bearish movement moves, how the bearish movement has been to this very level here, Now let's see what happened. You can clearly see we have about 1 2 3 4 5 candles has been made currently. So this is the level, this is where we take our reading from. This box right here. Let me see if I can. Okay, so this box right here, this is where we take our reading from to know if price is still going to drop to this second TP. Remember, we're already out of the market. We're not in the market anymore, but we're going to see if we should be expecting more bearish movement based on this bearish displacement we're seeing here, this bearish displacement, and also based on this breakout. Now there are two things involved right here. These two levels are just marked out now. Nice breakout, you understand? So now there's a huge bearish displacement. Now this is where traders get fucked up. This is where a lot of traders get fucked up. There's a huge displacement in the market, a huge bearish displacement in the market. There's a nice breakout in the market. So two things are going to be happening here. Remember, like I always say, there would be no price movement in the market if there is no liquidity in the market. What do I mean by liquidity? Liquidity in sense of money. The market will have no pressure to move to the opposite direction or continue moving in its previous direction. You understand? So it comes down to not just buying and selling. It comes down to liquidity always. It always boils down to liquidity. The professional traders, the insiders, the banks, and whatsoever, the good traders, the strong traders, the big traders, the smart money movers, they are always cautioned and they always know how to make liquidity even when there are no liquidity in the markets. So you have to be smart. Like I said, it's all about smartness and all about understanding where liquidity comes in and how liquidity comes in. All right, so we've seen a bearish displacement, we've seen a breakout, but we've not seen liquidity to the downside. Now, we've not seen liquidity to the downside, but we've seen a strong bearish displacement, we've seen a breakout. Now, what happened after the breakout? Now, let's see. Now, I want you guys to keep these two things in mind, liquidity and breakout. This liquidity and breakout are marked out here, so let's just make it so you guys don't forget about it. All right, so let's keep on going. So after the breakout, we saw how price instantly reversed back. On the next 4-hour candle, we saw a bullish candle, full bar reacting back, just dropped a little bit downwards, and it reacted instantly, ran back above the demand level. Remember, we're at a demand level right here. This is a demand level right here because price has reacted. You can see price reaction when price got there the first time. You can clearly see the reaction here. You understand? You can clearly see the reaction. So we are watching to see if this demand level would cause this same reaction when price get there, and we can clearly see it's forming, and it looks like we should be expecting a similar movement, which means this market could reverse at this very level, but we don't know. Let's keep on analyzing and see how it reacts completely. All right, so let's go. I just want to show you that we're on a demand level, so you keep an eye out. Even though we are seeing remember these two inside are marked, even though we are seeing a bearish displacement and a clean breakout, but the important factor is not just breakout and bearish displacement, but we're on a demand level. So you have to be cautious on how you react to those bearish information because we are at a demand level. All right, so you can clearly see this candle here, this bearish. After the breakout, you saw how price instantly reacted, went in back and closed above the demand level. Now let's look at the next candle. What happened after the close of the 4 hours bullish candle? You can clearly see price dropped back a little bit, head at the demand level, and you can clearly see how price reacted, leaving us something like an uptrust. You understand? So this looks like an uptrust, indicating demand is entering the market. Somebody somewhere is actually buying into this demand level. Very important, very important, very, very important. Somebody looks like somebody is buying into this market on this 4 hours candle, on this 4 hours bullish candle right here. Very important. So let me mark it out so we have a clear understanding of what is going on. All right, so we've seen an uptrust right here. We've seen an uptrust candle, right here, where we saw the market dropped a little bit. The market dropped to exactly the demand level, and you can clearly see how it reacted. Went back up a little bit, gave us a bullish candle, and closed on that bullish candle. The next candle also gives us an insight on how price is reacting. So not just reacting, on how price is reacting to supply and demand. Very, very important that you put that supply and demand, not just price reacting. It's reacting to supply and demand. You understand? Very important. All right, so the next candle, we clearly saw how the next candle moved. Price opened at 1401. Price opened at 1.40146. Then it dropped a little bit. Remember, it dropped a little bit to 1.4011, and instantly reacted back, giving us a bullish candle. Reacted to 1.40228 before it closed on the previous candle. Very, very important. Now also this movement is also important, so you have to keep your eye out, not just for supply and demand, also the previous level that was broken, because that previous level also has an insight to price movement. This previous level here, very important you observe this movement, because this can change the reading for you. This can change everything we've been reading. This level can change them, because this level was a demand level right here, caused price movement opposite to the opposite direction. You can clearly see it. Let me mark it out so you understand what I mean. You can clearly see it to the opposite direction. Now the bearish displacement we saw, this bearish displacement we saw right here, broke through that level, but price has not retested that level. You understand? So there must be supply around this level here. So supply must be around here. A lot of break and retest traders, would be around this level right here. You understand? Now this is very important. You understand this. A lot of supply and demand traders are right here. Others are right here. Let me mark it out. So when we're analyzing, we're able to understand each and everything going on. So we're able to make our decision based solely on what is going on and what we should be expecting. So there's a lot of, we believe that there would be a lot of supply orders around 1.4022. all right, let's go. So we have a supply order around this level right here. You can clearly see you can clearly see how. Now let me delete this stuff right here so it doesn't confuse you, because now you know that that is a supply level, that red supply level. You can clearly see how price reacted to the supply level right here. When price got to that level, after price get to that level, we saw a strong bearish, we saw a strong bearish candle. Now this is not a strong bearish displacement. Let me delete this stuff. Now this is not a bearish displacement. It looks like a bearish displacement because you can clearly see, yeah, it's a huge bearish candle, but we are not going to be reading it as a bearish displacement. We're going to be calling it a bearish candle, just bearish candle, because now it was not able to engulf the whole, it actually covered the bar, but it was not able to engulf the full previous bullish candle, but the wick. You understand? So we're not going to be calling it out as a bearish displacement. So what we're expecting to see, now we've seen that yes, indeed supply came through. Yeah, like I said, there's a lot of supply order. There will be a lot of supply order around here. This is the level I marked right here, this level right here. So, and you can clearly see indeed there were supply around that level. So that supply caused this bearish movement we saw here. Now the next question we should be asking, would that supply be strong enough to take out the demand we saw entering this level here? Would that supply be strong enough to take out this demand, this 1, 2, 3 candle, 4-hour candle demand that we've been seeing in the market? That should be the next question, and that should be the right question. Would it be enough to take it out? We don't know. We're not able to say till some next, like let's say some next 2 or 3 candle, we would be able to get the right information about would supply be strong enough to take out the demand around this level. So we have two conflicting factors around this level. We have demand trying to get in here. Let me mark it out, change the color so we don't get ourselves mixed up. So we're changing the demand level to blue. So we have demand level around here. We have demand orders around here. We also have supply orders around here. You understand? So the next question, would supply be able to take out demand, or would demand be able to take out supply? So we don't know. We're not able to say till price reacts completely and we see how price reacts. All right, so let's go. So another important factor to observe. Now we've seen supply in the market, we've seen demand, and it looks like demand is actually greater than supply. So let me adjust this. we've seen, let me delete this stuff. So we've seen how we got to this very level. Now let's see what we should be expecting. We've seen how we got to this very level. Now let's see what we should be expecting. What we should be expecting based on supply and demand. All right, so what I'm expecting, we've seen how price reacted to the bearish displacement, and you can clearly see now this green level right here, market head above those levels. Now we've seen bearish movement, which is this bearish candle right here. If this bullish candle is able to break above this current supply level, once this market breaks above this minor supply level, this would be a good position. This would be a good position to enter into your buy position above the level. After the breakout, you buy above, wait for the retest. Your stop loss should be around here, because now you've clearly seen that yes, this was a liquidity sweep, whereby the market the market was able to get liquidity. What do I mean by liquidity? Now I want you guys to keep an open mind here. Now if this level I just marked out, now after the breakout, naturally, not just naturally, there would be break and retest traders would line up around here, planning to short the market downwards. They would be planning to short the market downwards. A lot of sellers would be around here. Now when the market drop, tap their order in and instantly reverse, you can clearly see a lot of orders would be around here. A lot of open short order would be around here. And if this market continue pushing upward, you can clearly tell, you will clearly observe that yes, a lot of orders would be filled out, a lot of short orders will be filled out, and a lot of orders will also be around here. All these bearish orders I'm marking out, they will all turn to liquidity. They will all be wiped out, and they will all turn to the opposite price movement liquidity. This is very important. They will turn to the opposite side liquidity, which this automatically will give demand high movement strength and high movement capacity to move to the opposite direction. All right, don't worry, as time goes on, you will be able to understand how and when we should be expecting to see liquidity in the market. All right, so we have a good trend, we have a good liquidity sweep. We've seen a nice structure. Now once price breaks this up, once price breaks this structure right here, we are planning to see price break above, then retakes. Once we get that pure breakout from this candle right here, we don't know if it's going to be a breakout, but we're hoping to see a breakout right here. Once we see a breakout, we have a nice position to get our order in, nice stop loss, and we'll be holding our position. So let's see what we should be expecting. We should be expecting to see at least 0.67% movement on the upside, and our stop loss should be around 0.27%, 24%, sorry, 0.24%. yeah. So that's it, guys. That's it. So we're not expecting more bearish movements. We're expecting demand to push this to break above this green supply level. Once we get that breakout, we should be going long until we should be going long here after the retest, and the stop should be probably around this level. So let me mark it out. Let's see. Price is actually trying to break out, but we don't know if it's going to break out completely. So that our entry points would be around 1.40257, and our stop should be below. Okay, our stop should be below our stop should be below 1.39893. Yeah, and our TP should be around 1.41159. 1.41159. Yeah, so that's it. But if we don't get a breakout, if we don't get an actual breakout, and supply keeps entering the market, around this level right here, we should be seeing price drop below. We should not see a breakout. We should see something like a shakeout. We should see something like a shakeout, then price dropping below to this very level right here, to that very level right here. So we're keeping our eyes out to see price breakout and retest. Then we're going long to see how it reacts to the upside. All right, guys, remember, this is not a financial advice. This is not an advice for you to buy. This is not an advice for you to sell. This is just for educational purpose. This is to show you how supply and demand actually comes together and reacts to cause price movement. This is not an advice for you to sell. This is not an advice for you to buy. The financial market is very risky. One of the most riskiest business you get yourself involved with is this financial market. So this is an advice. This is not an advice. This is just for educational purpose, to show you how supply and demand works, how accumulation works, how manipulation works. Nothing more, nothing less. All right, guys. Hope you guys have a nice day and stay blessed.